I made over $30,000 last month trading one simple strategy, and I'm going to show you right now how to use it so you can do the same thing. Let's get into it. Now, before we get into it, I found this strategy only works in the small cap market. I'm not trading futures, I'm not trading options, and I'm most definitely not trading Forex. Now, the reason why this strategy works is because of one man named Ralph Nelson Elliott. His theory states that retail traders are often very predictable when it comes to their motion when looking at price action of a stock. To go further in depth, he stated that stocks have a 5-wave structure. And for the sake of time, to summarize this theory, basically stating that after the 5th wave, the stock is due for a correction because traders are so greedy, they push the stock up to overbought levels. Now here's where it gets interesting. After the said 5-wave structure, what happens? We actually have a 3-wave structure to the downside. 1, 2, 3. Now, what I like to personally do is I like to take this pop right here, and I'm actually going to go short, which means that I'm betting that the stock is going down. However, 3 things have to come into play if I want to do this. 1, the volume has to dramatically decrease. If we see a volume decrease, this is a very bearish sign, stating that traders no longer want to trade at these overbought levels. 2, the stock has to have a solid enough pop here to try to reclaim high of day before I short it. I'm never going to short in a weakness, and lower lows need to happen. And all this is being done on the 5-minute time frame. And the last variable is my entry, which should be around here, needs to have 2x the distance from a 50% retracement level than it does high of day. Let me explain. If this is my price target and I'm stopping out over high of day, this right here is my potential profit and this right here is my risk. And if my potential profit is 2 times or more than my potential risk, then I'm going to take that trade because the risk to reward ratios would be in my favor. Let's look at some examples. Now this stock actually played out on multiple time frames, which only increased my win percentage, but you can see 2 things. 1, we have a 5-wave structure to the upside and that drop and pop I talked to you about, but we also have a monster volume decrease, bearish. And this was my profit level, this was my risk level, and you can see that my reward level given to my risk level was over 2 to 1. Now if you want a further detailed explanation of this strategy, or you want to watch me trade this live a few times to get the grasp, click the link in the bio, and don't worry, it's free.